So, hello everyone. My name is Jean-Louis Van Houwe. I'm the chairman of FinTech Belgium. And today, the objective of the day is to understand, the neobanks, the challengers versus incumbents, and understand in the agility and customer acquisitions who will win, who will lose. But before starting this debate, let me introduce you the three speakers, and maybe we should start with SARUNAS. Thanks for introducing yourself, please.
Hi everyone, so my name is SARUNAS LEGECKAS and I'm a General Manager of Greater Europe at N26.
Fantastic, you have been very brief and brave. So let me switch to Jeffrey.
Hi, my name is Jeffrey Alberts. I'm a partner at Prior Cashman. I work in New York and I represent banks and fintech companies in regulatory matters, representing clients both based in the United States and outside the United States.
Very cool. Thank you very much. And now, last but not the least, MANTAS.
Hi, everyone. My name is MANTAS. I'm the CEO of Verifo, a growing business-focused electronic money institution in Europe.
So thank you very much. So we have very exciting subjects, always the neobanks, the new entrants, and versus the incumbents. My first question is respect to agility, and I will maybe start asking our friend from N26, SARUNAS, what would you think is the most important factor of agility? Because agility can cover many things, but what is really agility for you?
It's a very broad question, of course. I could answer it in many ways, but I guess we are talking about our topic of incumbent banks versus digital banks. So I guess a very big advantage of digital banks is exactly agility, and what allows digital banks to be agile. A few things, and one, the most important thing is infrastructure, right? So we know that incumbent banks are struggling with these central banking systems that are built in 1980s that are very costly to sustain. They're slow. And banks are not willing to risk and change the infrastructure. So I think digital banks have a big advantage here because most of their infrastructure is on cloud. That allows to create products much faster. Second thing is I think fintech, like digital bank, we have more people from tech than from financial technology. So I think people that work in digital banks, they are used to startup agile environments, and I don't know, they can adapt faster, they can build products faster, and that would be agility for me in a very short sense.
Thank you very much. Maybe the point of view of MANTAS, of Verifo, with that respect, agility, and especially with respect to infrastructure. Do you share this view?
No, of course I agree. I agree that technology plays a big role here. I would also like to add that incumbent banks are comfortable as a startup or as a growing business, whether you're self-funded or in the case of bigger neobanks, if you receive investor money, you get quite a lot of supervision, so that helps you react quicker. Another big thing is also feedback. So listening to customers, and I think we as a fintech community, we've learned this lesson, and we're trying to listen to the customers, react to their needs, and not necessarily doing everything as we've done for the last hundreds of years.
And listening to the customer, because one thing behind the agility is, as I understood, is really the ability to have the digital infrastructure and to be faster and more agile. But also one thing which is of paramount importance is the customer intimacy, the customer experience. Maybe again, for our friend SARUNAS, what is for N26? How do you really think you compete against incumbents, and what are your trumps, sorry, with respect to that?
Yeah, so as Mantas rightly pointed out, is, you know, I think the biggest difference between digital banks or fintechs in general and incumbent banks is that being customer centric, right? We have you know, Netflix that transformed the entertainment industry. We have Amazon that transformed commerce business, or Uber that absolutely turned around the taxi business. So the same is happening in the banking or financial services world now. And I think one of the most important things is exactly the customer, being customer centric, listening to the feedback, creating a smooth customer experience, right? We sometimes are asked, oh, you know, this incumbent bank just also released a mobile app that is nice to use. They also have a mobile online banking, but it's not about just, you know, creating a feature or a set of features. It's about creating this flow of like a very great experience, which I think is a very big difference that digital banks can offer.
Okay, thank you very much. I will come back to that because, you know, when we look into the region of Europe, I'm in this fintech industry for years, and we see that the incumbents are adapting themselves. And to a certain extent, they've been working on the infrastructure, they've been understanding the, you know, the lessons from the fintechs. But I'll come back to that because I'd like to have an important questions about regulations. Coming also from Europe, the Payment Service Directive 2 is really introducing a massive amount of turmoil, of chaos, but of course, from chaos, you can have many opportunities. But with respect to that, could you highlight what's happening, of course, Jeff, what's happening in the US that you think would really, you know, spark even more competitiveness in the market of the US and the ease of the neobanks of you know, entering this market and being more successful. As we see today, it seems that neobanks are more popular in Europe in proportion to the US. So what's your point of view, Jeff?
Sure. On the regulatory issue, one of the main barriers that we've seen in the past is the fact that every single different state within the United States has the right to regulate any neobank that comes in. So that's been a huge problem for any bank that's trying to enter the US market and has to deal with all regulations. Now, if you're a formal bank with a charter, that supersedes and you only are regulated by one federal entity. But if you are trying to start up and do business in one of the 50 states, you have to deal with different regulatory requirements from every different state. So what happened is the Office of the Comptroller of the Currency, which is a federal regulator, tried to create this fintech charter. And that was a great opportunity, but they immediately got sued by the banks that want to take control and didn't want to give up their right to regulate these institutions. So right now there's a fight going on in multiple different court proceedings between state regulators and federal regulators that are suing to see whether or not regulations will be opened up, which would allow neobanks to come in more quickly.
And that's, you know, in Europe, we are most of the time complaining that, of course, the EC is not homogeneous. But at least for the payment perspective, with the Payment Service Directive, we are pretty happy being a fintechs, obviously. So to that respect, in the US, do you think that a kind of PSD2, a type of regulation, might happen over time?
It might happen over time, but it's not going to happen anytime soon. So far, actually, the states have been winning in the battle with the federal regulators over who's going to end up getting to control this space. So I think in the long run, you may see that kind of shift, but right now you really aren't seeing a lot of movement in that direction. And one reason for that is there's not a huge consumer demand here. I mean, there may be a kind of suppressed demand, but consumers here aren't clamoring for more neobanks. And in fact, you know, your last question dealt with agility. One issue that we saw recently in the United States is some of the fintech companies were agile in some ways in responding, for example, to the coronavirus and the payment protection program loans. But some of them were even less agile than the banks because they didn't have, for example, if a huge call volume came in, more traditional banks sometimes had an ability to hire a bunch of call centers more quickly than a smaller fintech startup that got overwhelmed. And we even saw some of the fintechs had their websites crash because so many people were trying to get in and apply for the PPP loans. So agility can cut sometimes in favor of upstart neobanks and challenger banks, and sometimes can cut against them.
That's very interesting. Maybe coming back to, before the question about regulation, I was mentioning that there were things behind agility and customer intimacy. And maybe for the N26 perspective, Sarunas, what would you think that would be, or that has been the ingredients of your success behind agility and customer experience? Because this is pretty general, but what were really the specific elements of N26 success as opposed to the incumbent, and how do you think that this could be used or replicated in the States?
So there are a few things, right? So I wouldn't call it not success, and I like how everyone wants to oppose digital banks and incumbent banks. So I would like to say that what I'm most excited about is, I'm going to give you an example of Uber and taxi industry in general, right? Before Uber was born in New York, let's say, taxis would be smelly, the drivers would be rude, the pricing would be not competitive. And it was a common problem across the world, right? When Uber and similar services were born, everything got much better. We have a much better competitive pricing, the cars are nice, the drivers are polite. So we all as a customers benefited, right? So it's exactly the same what's happening now. So N26 is the Uber of the banking industry, right? And because of that, most of the incumbent banks, they have to step up their game, they have to improve, they have to launch mobile apps, they have to launch mobile payments and other cool things. And what is even more exciting is that regulators, which are usually viewed as these rigid, also very conservative bodies, are also adapting to that, right? And I think we need to be very happy that we have this great competitive advantage in Europe over US. As Jeff mentioned, is that like N26, we took a banking license from ECB in 2015, and we are passporting that license to all the European markets, right? So we don't have to comply to the regulations every market. We are just regulated by BaFin, by German regulator, and we're using the same banking license. That's an amazing foundation for innovation. And it's similar across the board. I think N26 was one of the first to introduce fully mobile KYC process and onboarding, where you could open a bank account in 8 minutes and so on. So these are the things that creates a huge advantage for N26 or other fintechs and for Europe. So that's why we see that fintechs are going from Europe to US, where usually we see that companies from Silicon Valley or just in regular from US, like big companies like, I don't know, Airbnbs and Netflixes of the world are coming to Europe. So I think we have this competitive advantage in this particular case, and I'm very, very excited about it.
That's very cool. But as you said, actually, and we were also introducing with this idea that the banks are reacting to the fintechs, they are learning from the fintechs. A lot of times, or in many instances, where the fintechs are not really competing with incumbent, but rather, which is not your case, I believe, of N26, but rather collaborating. But maybe that's a question for Mantas. If the banks are adopting this very cool UX, user experience, increasing price transparency, and we will come back to Jeff to see whether this is happening in the US. If these are going full mobile and providing digital service and leveraging, obviously, their asset. which is their customer base and the trust of customers that are customer for, when they were 6 or maybe not 6 but 12 to 18 and beyond. What do you think that if the banks are truly adopting all these criterias of and the USPs of the fintech, or would you as a fintech respond to that? What is the never-ending reaction to these incumbents that reacts and to adopt or copy the fintech, if you want? So what is your point of view, Mantas, on that one?
I actually, I would say that this is a very good question, very on the topic. I would say it's very early to call who are the winners. I think the banks are still doing quite well. I think during the coronavirus pandemic, in the recent months, there was a lot of flight to safety. So you can always have people jumping on the new cool thing in your mobile phone, but then once you really talk about bigger amounts or keeping the funds safe during certain times, I think it actually is the brick and mortar businesses, so the old banks that are benefiting or still have a lot of advantage, at least in terms of perception in the public. And I think the biggest winners here would be the consumers. So whether the banks copy some of the things that we do, of course, we still work a lot with the banks. We want to have swift payments. You go to the banks. So there's a lot of cooperation, and I think what's going to happen is more market segmentation. So banks will probably still, or at least a good time, keep the big corporates and then more advanced services, whereby more agile, more cost-effective neobanks or EMIs or money remittance businesses can take on all of these simple day-to-day tasks, keeping your budgets and similar services.
Thank you, Mantas. Maybe a question for Jeff, because I was prompted by, what just have been said by our friends SARUNAS and MANTAS. You as, as being a legal guy that is accompanying, US firms for the responding to the regulator and maybe European firms, are you today, let's say, called by European players that try to invade or try to start the operations in the States? Do you see that happening?
Yeah, we definitely see it happening. I think from the people that I've spoken to in the industry, I think there's a perception that the traditional incumbent U.S. banks are more sophisticated in their use of technology and offering consumers what they want. And I think in Europe, at least in some markets, there was a real advantage where people would go in, be very consumer facing, super consumer friendly, offer them new things that they didn't have, toys, gadgets, abilities to monitor their wealth. But banks here have been more aggressive, more incumbent banks have been more aggressive in adopting those types of things, which makes it hard for a neobank to come in and take away consumers, because if the consumers are happy, they don't want to leave. And there's still there's that brand recognition that it's hard to undermine. So a lot of people are coming in, but I think the most vulnerable players are not the large traditional incumbent banks, but the smaller regional or even community banks, because those banks really don't have the ability to pay for the development and constant change that would be necessary to be agile and respond to what their customers want. So I think neobanks that are coming in are often targeting those community banks as opposed to targeting the very large incumbent banks here in the United States. And I think there's a larger segment in the United States of these small mom and pop community banks than there are in Europe.
So would you say then that for a neobank to be successful in the States, it's really a very smart adequation of a very specific product offering to a specific market segment? So it's really customer market segmentation that will make these new entrants successful?
That's what people have been saying so far. It's always possible somebody will come in with an incredible new product that will pull people in, or even a marketing campaign and a similar product that will pull people in. But I think the easiest way to enter the US market is to pick some small segment, really target it, and offer them something that they otherwise wouldn't have.
And Mantras was also mentioning the branches aspect, because everywhere in the world the branches are some not disappearing but shrinking massively. And then he was mentioning some kind of the phygital type of consumer potentially, where you examine the offer on online and then you go physically because it's about your money, and the people they need trust. Do you think that the American incumbents are really playing this phygital aspect of the consumer and approaching the consumer?
Well, they have to now. I'm based in New York, and the branches are all sitting there paying rent for branches that are closed and nobody would go into anyway. So I think that's right now, there was already a trend towards that, but the way things look now, it could be a year or more before the branches start opening, and I think even longer before people are comfortable going into them. So I think that's really accelerating the shift towards more of a online focus instead of a branch focus.
So maybe a question to SARUNAS with respect to the neobanks. Some people would argue that actually, proposing a card with some kind of personal finance management, it's a pretty thinnest kind of feature to differentiate. If at a certain point in time the bank says that's happening in the States, but obviously also in Europe, are copying your cool end user interface and moving on with key features that are really very cool. I'm an N26 user, by the way, but do you think it will be sufficient to resist to the banks and the incumbents? What do you think about the perspective on the long term? Because you teach them how to be cool, but then if they all become cool.
So first of all, congratulations on making a right decision and choosing your digital bank. So I'm very happy about that. In the long term, of course, nobody knows how it's gonna turn out in the end, right? But I think nobody in this panel or in this conference could argue that a bigger part of the retail banking, at least, will be occupied by digital banks. I think it would be very difficult to find arguments why it's not happening, right? I guess where the more incumbent banks have more experience, more wealth, is I don't know, corporate world, wealth management and other things. But in regards to creating a consumer layer, creating a good basic retail banking experience, I think digital banks gonna win this eventually. We're already seeing, that the penetration rate of digital banks in some countries are very, very high. And it's just a matter of time. Is it in 5 years, in 10 years? It's very difficult to tell. I think coronavirus actually accelerated that process, that people wouldn't go to branches. And like Jeff told an example of how digital banks couldn't manage the loads, which could be the case in maybe in some cases. But for instance, we saw a bigger growth in signups and in deposits as well during the corona. Because one thing, N26 is a fully licensed bank, so our deposits are secured by 100,000 euros deposit security scheme, like any other bank in Europe. So we also saw a big acceleration in mobile payments, and yeah, all kind of signs show that I think the whole digitalization process is just accelerating faster, maybe than even anticipated, right? But again, I don't think this all competition is not winner takes it all, right? It's gonna be, I think, people choosing different banks, whether you are sticking to more like you need this branch, physical branch where you go and meet your manager, get a coffee, and there is a part of society that really wants to be fully digital. And even with N26, in the very beginning, a majority of our customers were millennials from 20 to 40 years old, and now we have oldest customer of 90 years old, and the biggest growth in the last year is actually in the target audience of 50 to 65 years old, right? So I think all these signs just showing that digital banks are penetrating the market. It's just a matter of acceleration.
But so when you say digital bank, you include the incumbent as well, I suppose.
No, I more refer digital bank to like digital only, like N26.
Neobanks.
Yes.
Okay. But as I hear, you are mentioning the millennium and so forth. So that means that you are. Is it your idea or the your view that you are targeting products market segments, or what's your view on this marketing approach?
So, N26 started not that long time ago, 7 years ago. So we've got a lot of people that were early adopters, right? So, of course, the majority of our initial customers were very well-educated people from business background, that higher income, that travel a lot. And this is where majority of our customer base was in the very beginning. But what I'm trying to say that now with more education, with more presence and brand awareness, we're seeing that the shift is changing, and it's going to like older population, different income groups, and just kind of reaching a wider society in general.
Okay, but I'll come back to you with the breadth of services that because you don't offer all the breadth of services that an incumbent bank is offering. But for Mantas, in Europe we have many neobanks. We have also many new PSPs, payment service providers. You have massive amount of money that is poured from VCs, from private equity. Do you think that to a certain extent that we could reach a kind of bubble, a little bit what we knew in some other sectors, in telecoms, in the broadband, or where at a certain point in time a lot of investors are trying to pour some money, but at the end of the day, do you think that at the rhythm of and the acceleration of number of new players with all this money and this equity that is poured to them, do you think that to a certain extent that we will reach in Europe some kind of bubble in the sense that you have too many players, and maybe that will be a wave that will obviously go towards the States, but let us maybe just see this in Europe. What do you think would happen?
Oh, I'm sure that's going to happen. I think it is hard to take on an incumbent bank, precisely of the reason that you mentioned, breadth of services. You keep your pension, you get your insurance, and a variety of different services from a incumbent bank. It's very easy to open a neobank account, which is one of the selling points, but that doesn't mean that you close your incumbent bank account, which, if you check the data, doesn't happen. So a lot of the customers just pick a few neobanks. I have probably 10 or so, and you pick the best players for best services, and I think that's the beauty of it. I think that's also the secret to being successful in the market, just finding your own niche and competing there. And Europe, even if we have similar regulations, is very different. You were able to open an account in the UK 8 years ago when I was a student there. It was, through post, so not ideal, but you still were able to do that quite a long time ago. And in Lithuania, for example, at the moment, you wouldn't be able to do that with an incumbent bank. So there's a lot of variety, and I think it's important to recognize your strengths and your markets and be successful there.
So Jeff, what do you see? You have been discussing about the kind of regulation hurdles with difference between the federal and the states. But what do you see that the neobank, or do you see a lot of investors, supporting the introduction of either European or American players? And do you think that the neobanking, the number of players is increasing, and you see a really steady growth, and you believe that it will be steady for the next 2 to 5 years? What's your view on that, on the dynamics of this market?
Well, it's not really steady growth, and that's partially because one pattern that you've seen in the United States, and I think it's part of the strength of the incumbent banks, is that many times the very most successful neobanks or fintech companies that start doing business and start having an attractive platform will shortly thereafter be purchased by an incumbent bank. So I think because of that, you don't see a steady increase in the total number of players, because many of them get eaten up by the incumbent banks, and that can be the result of their very success, is that they cease to exist. So I think in the long run, I think partially because of that regulatory issue that I mentioned before, it often ends up making more sense for the most successful fintech platforms and neobank platforms to be purchased by a big bank that already has a license, as opposed to try to compete with them straight up when they don't yet have a banking license, and it's very difficult for them to obtain one.
Okay, so on the dynamic of the market, do you think that the regulator is trying to play a certain role in order to ease this, the starting of new players, in order to have a competing market that is a little bit more stimulated?
Well, definitely, but it depends on which regulator you're talking about. Right now, the acting comptroller of the currency used to work at Coinbase, which is a cryptocurrency platform here in the United States, and he's been very supportive of fintech companies. And the previous comptroller, similarly, was very supportive of fintech companies. But as soon as they tried to develop a new license that would be of use to these fintech companies, they got sued by the states. So I think while the states pay a lot of lip service to being interested in enhancing the competitiveness of fintech companies, so far they've really been a barrier, and they've stopped the federal regulators who want to open things up from moving forward.
So that does it mean that as a result that the tariffs of the pricing of the American banks are not really under pressure?
Yes, they are not really under pressure from neobanks at this point.
So not yet. So it will. There is a lot of work to be done then, I guess.
I think that's right. I mean, one thing that will be interesting to see is if there does come a point in time when these regulatory problems are solved. A lot of people are concerned that a lot of people who are focused on the U.S. are concerned that what will happen is shortly thereafter, all these sophisticated neobanks from Europe will flood in, and we won't really have homegrown cutting-edge neobanks because we've been suppressing them with our regulatory scheme. So if you solve the regulatory problem, it could be a huge opportunity for more experienced, well-developed neobanks from outside the United States to come in and take a big piece of the U.S. market.
Okay, SARUNAS, maybe to see the perspective from the services. So you, as a neobank, most of the time you start with a card, you have an account, you are aiming at people or youth that where it's more difficult to have an account sometimes. Some kind of services like exchange rates, being able to buy on the internet, to have a cool view of the expense, but obviously, you are not offering the breadth of services that a traditional retail bank. How do you see the rhythm of new services that neobanks will or should provide, and what would be the pace of these new services? Obviously, with the perspective of N26, but also what you think should be the case for the neobank phenomenon.
Okay. Do you mind if I take 2 seconds back and just comment on the US part? So Jeff was sharing his ideas, and as you know, We were the first neobank to enter US market. Maybe it's almost a year ago now. And even though I don't have much experience, I'm more responsible for European markets. But in general, as Jeff was saying, having the strict regulator and protecting the consumers is a wrongdoing in the sense that consumers cannot freely choose better services, better products, cheaper products, transparent services, right? And even though Jeff says that they have very good banking products, I could slightly disagree. I have different opinion. Having had few businesses in the past and worked with Americans, I was really surprised when they would say, "SARUNAS, I need to make you a bank transfer, so I have to go to my branch, deposit money, and so on." So I think American consumers are underserved, and there's so much room for improvement, and that's why now banks are looking and entering U.S. market. Of course, United States market is very, very competitive, and consumer habits are slightly different from European. So it's going to be very interesting to observe how N26 is doing there, how other banks going to be doing, whether it's homegrown or from Europe. So yeah, just to close that topic, I think it's a very, very interesting thing to observe. Coming back to your initial question about the services, so Rome wasn't built in a day, right? So you have to build up your services step by step, and one of the most important things for a bank is trust. And a lot of incumbent banks actually lost their trust many, many times. Starting with the crisis of 2008, many money laundering scandals that are shaking up Europe and Scandinavia now. I don't know, numerous power abuse situations. So it's not new. I think customers around Europe, at least, they're tired of banks, and they're looking for something fresh, and neobanks is that fresh service that they can use. You see only maybe as you are a Belgian customer of N26, you only see a current account, a debit card, and few other services. But N26 already offers a variety of services, or overdraft, savings product, and investment products in our core markets like Germany or France or Spain or Italy, and experimenting with a wider range of products, which I think gonna come to the wider Europe and other N26 markets. I think it just takes time. We wanna get the basics right, and we see there's a lot of potential to really get the basics right before we keep adding those products. Then hopefully we have this modular infrastructure as well as modular structure of the company where we can plug and play with different services and have the possibility to do that and be innovative.
Very good. One question about the data. Obviously, in order to have personalized the services, the understanding of data to make it relevant to the user is of paramount importance. What is your view on these type of services? How do you think that digital or neobanks would be better or are better off because from the start or from the outset they can build the data strategy to better service their clients? What would be your view on that?
So, I think we have very strict GDPR rules here in Europe. Also, N26 is a regulated bank, so there are certain regulations and compliance requirements around security, but also around data protection. And especially we are regulated by BaFin, one of the strictest regulators in Europe. So all the data that we keep is anonymized, and all the algorithms that are building and all the suggestions they are making on anonymized data. So I don't see a big challenge here.
Okay. Now, maybe a question of cryptocurrencies, and maybe this is a question for MANTAS, which is doing payment services. How do you see the progress? Maybe it's a poisonous type of question, but maybe the answer is very, very short. But how do you see, the crypto assets and cryptocurrencies, moving on in the payment industry?
topic. I think there's a growing understanding of the technology and acceptance. Of course, there are bad examples and history and some bad uses of cryptocurrency, which probably limit the growth. For example, you have regulators across the EU that have a very different understanding of cryptocurrency. But I would say that the majority of cases, it's becoming more and more regulated, which means it's more and more acceptable. And just the other areas or other countries have to catch up. Estonia is doing probably the most popular jurisdiction in Europe for that. Lithuania has introduced laws and regulations, so for it to become acceptable. And I think there's a lot of challenges still, but it's going.
And that, would you say that the fintechs would be more tuned to start new type of creative services based of crypto than the incumbents?
Yeah, of course, and you would see that a lot of banks, especially in Germany, are quite crypto friendly. I would say. So.
Okay, very good. Jeff, you mentioned that the guy from Coinbase was becoming, having a very important role in the regulation. What is the status of the? Do you receive many, clients or potential prospects are trying to invade this type of technologies and provide new ways of paying in the States?
Well, there's definitely been a slowdown in that because of a lot of enforcement actions that were brought a couple of years ago. But I've been representing entities in that space for a very long time, beginning back when I represented the individuals that created Ethereum and continuing through the present. And I think right now, as you get people in government that have a background in cryptocurrency, that's definitely increasing the acceptance. They face the same 50-state problem that other banks do. But I think cryptocurrency users are a good example of what you referenced earlier, which is a niche market. So I think large banks are very leery of the risk that might be associated with cryptocurrency, and that creates an opportunity for a new startup company that can really focus on that niche and take it over.
And also with respect to data protection, as you know, in Europe, we have the GDPR, and there is nothing such that in the States. But is the data protection, is this something that is under the control and the supervision of the regulator of financial services in the States?
Well, so again, the different states have different standards, and I think right now the driving state standard is California. California instituted a fairly restrictive set of rules that relate to how data is handled, and that's causing most national companies to have to comply with the California standard, which is more strict than a lot of other states. But there hasn't been any agreement by all of the states to adhere to that standard. So you still have a problem where you never know if another state is going to adopt a new data protection standard that is more strict in some way. And that requires companies to be constantly tweaking their data protection rules to ensure that they're complying with all of the states in which their consumers are located.
And coming from Incumbent, as you have explained to us, that the Incumbent are very aggressive in the sense that moving, their ass in order to improve the services to the consumer. Do you see a massive use of new services based on data science and AI in the States, as provided by financial incumbents or players?
Not really. I think consumers aren't sophisticated enough for the most part to distinguish between the data privacy offerings of different institutions with which they do business. So if there's a scandal in some way, so if there's a hacking event or if there's a leak of consumer data, that can impact how consumers respond. But it's difficult for consumers to assess that type of difference between different incumbent banks.
Well, thank you very much. I see that we have 10 seconds to go, so maybe it's a good time to conclude. I would really thank you, all of you, Sarunas, Jeff, and MANTAS, for sharing your view on the relationship between incumbents and new players. It was a pleasure to have you in this session. Thank you very much and take care.
Thanks a lot.
You too.
Thank you.